Welcome to, I think this is episode 77 or 78 of
78,
going,
I think, yeah.
episode going live with good soil. Um, it's another, we were just talking on Twitter Spaces. We're doing this on our YouTube channel at the same time as Twitter Spaces. So bear with us here. Um, anyway, another down day for Tesla, a new 52-week low again. Every Tuesday when we're doing this, it's like a new 52-week low being hit recently. It's very tough and stressful for all of us Tesla investors.
I
Real
mean, it's
yeah.
actually like a 2-year plus low. I mean, we're at levels now that I'm just looking back at the chart. Kind of going back to August of 2020 is the levels that we're at right now.
Yeah.
Um, so yeah, it is a 52-week low, which is kind of what's reported, but it's just erasing years of gains. And it kind of strikes me. I mean, I had this thought. Sorry to cut you off, but I had this thought. I'm curious what you think. It seems like on the way up, there was this idea that Tesla was being revalued upwards, and it
It's
seems
like a
like
tech
there's kind of
stock or something.
yeah, it's like it was this what was it $50 billion company for a long time, kind of floating in that market cap, and then once they turned profitability, it was like people revalued the company and up to like the 1 trillion mark
Yeah.
eventually. It seems to me that with all this momentum and just the magnitude of the drop, that it's kind of being revalued lower. Obviously, with lower multiples, which is kind of going across the board, but Tesla's been hit particularly hard. I think with concerns of China and demand and pricing and all these things, it seems like a perfect
Mhm.
storm. And the market is now saying we think the company's actually worth a lot less than the previous exuberant amount. Does that
Mhm.
ring true with you or resonate at all?
Certainly, that's one perspective, and I think we'll talk, about the Tesla stock and the perspective of the actual stock, how it's different from the business too. We have some stuff to touch on with that. Normally, our outline, we don't have a lot to talk about macro stuff today. There's one thing I wanted to cover real quick, and then we're going to talk a lot about some stuff with the Tesla business that I think leads to the stock. But from what you're saying, I think there is some of that going on. But real quick, before we go into Tesla the business and Tesla the stock, the macro market, the one line item I wanted to really touch on that I had a couple people DMing me about and talking to me about that are concerned is the COVID outbreak, the massive COVID outbreak with, hundreds of millions of people in China, you know, having COVID infections. Some people are saying like 90% of their family and that they're in touch with in China are currently infected now or have been in the last week. And it's kind of crazy. And the way I see it is we call it COVID now, but I sort of suspect it's more like a lighter flu at this point. It's kind of the Omicron virus, and the current strain is sort of like a lighter version of the flu, but like 1,000 times more contagious, right? So, imagine like in the US, 80% of the US population all coming down with like a light flu at the same time. It would be like chaos for the hospitals. There's lots of people that the flu is very serious for, right? But it's not going to wipe out like 10% of the population, or probably not even 1%, probably like 0.1% or 0.01% or something. I don't know. But that's a lot of people when you're talking about like 1.3 billion people in China, obviously. So that's
Yeah.
my thought, is it's not as much of a crisis as if it was the strain of COVID from 2019, 2020 that was much more serious. If 80% of the population was infected with that strain of COVID, that would be really bad, I think. But currently, the strain is not as lethal, in my opinion, from everything I've read. So I just wanted to mention that because a lot of people seem to be panicking about that right now, just because it's called COVID
Yeah.
still.
And I kind of it seems like COVID has a little bit greater of an impact on people's psyche than other uh, you know diseases or viruses of a kind of similar mortality or kind of in a like health seriousness level. Obviously, it's kind of
Mhm.
a unique thing and it's relatively new, but the vast majority of people do recover. I think the big scare 2 years ago was that like it could end up killing 20% of the population or something like that, and we know now that that's not true, but still is serious, and some people do die. And we never want to diminish kind of the human aspect of this loss, but it does seem that like a lot of people I know have been sick with the flu lately, and they're worse than when they had COVID like a year ago. So
Yeah.
I don't know. It's just
Yeah.
it seems like we've given the word a little bit too much power in my mind.
Yeah. The only thing I'd watch for is if somehow a new strain evolves that's more deadly and fatal
Yeah, for
and
sure.
some I don't think that's likely. Like there's like laws of viruses where they, seem to evolve to be less lethal but more contagious over time. So it seems like it would have to contradict that law to do that. But this is a kind of an I think most people realize this is somewhat artificially created, this virus, whether it was let out in a lab or created in a lab, we don't really know, but there's some human element. It seems like most people realize at this point. So we don't really know with that what the laws of viruses, how it might react going forward for sure.
A year and a half ago, you would have been labeled with misinformation for
Oh, I
making that
was.
claim.
I
Were
was
you really?
one of
I
our,
didn't know
yeah,
that.
many people, yeah, a lot of people in the Bay Area here, were convinced it's, and I would say it, and even one of our partners that we work with, thought I was
The
thought it was
conspiracy
misinformation what I
theorist.
was saying. Yeah, and I was like, you know what? In a year, I think it's going to be a conspiracy theory to think that that was not the case, that it was not coming out from a lab, and so I think pretty soon we'll think it's a conspiracy to think it what didn't come from a lab. So anyway, let's move on to Tesla. That's what everyone's here for. Tesla. Okay, so Tesla the business. We got lots of interesting things to talk about with Tesla the business. Then we'll go into Tesla the stock. So Matt, why don't you kick us off with Tesla the business? Some interesting information we have here.
Yeah, lot to go on, but there's one nugget that I think is kind of interesting that maybe a lot of people might have seen recently without a lot of context, and that is there's this account called Zero Sum Game who posted. He's been posting a lot of kind of aggressive claims about the Megapack coming out of the Lathrop facility, this new Megapack XL, and his claim that he's been sharing recently is that the margins coming out of that one product alone are going to eclipse the entirety of the automotive business next year. So he
Next year.
those next year, 2023.
What? That's
Um,
not. I don't believe it.
so yeah, I don't really either, but I think it's probably worth diving into because he did actually uncover some kind of interesting things, and there's just it's kind of an interesting story if nothing else. So I thought it was probably worth diving into a little bit. But so for those who don't know, this is a relatively new account, at least in terms of kind of posting information like this. This individual has disclosed that he has a very aggressive position in, I think it's like 2025 leaps at a $600 strike. So like
Mm,
they're very clearly interested in like the stock kind of taking off. And just from my perspective, it does seem like they've been kind of, pumping a little bit. But that
mhm,
doesn't mean that the analysis is entirely without merit. So I wanted to kind of, with my background being in energy, kind of walk through some of the information that he shared out there. So essentially, he had this thread that was kind of looking at the cost components of this new Megapack XL, the incentives that are in the Inflation Reduction Act, and then just some kind of implied things that we know about just the backlog being many years out. If you order one right now, you can't get it until I think it's like Q3 of 2024. So there really is a lot that I think is worth diving into here, even if some of the claims I think are kind of on the sketchy end. But there have been a lot of reports. There have been some kind of people parked outside the Lathrop factory, which is where they make these Megapacks. And for those who maybe are not following Tesla Energy as closely, that facility has a production capacity of 40 gigawatt hours, which is like on par with Giga Nevada. So it's a huge,
wow.
meaningful amount of batteries that we've never seen in the business before. Like stationary storage has always been battery starved, and like it's never really produced margins that are meaningful in any way. So like, we've always been kind of expecting this to scale and become a meaningful revenue contributor. I've been a little bit skeptical of the margin potential, but I think there are reasons to think that might be changing. And so this individual actually claimed that the margins were going to be 60% on
60% on the mega
Megapack
packs.
gross margin. Yeah. And
Oh
so
wow.
if you kind of do the math of those go through, I probably can't do it in my head, but like I think it's roughly $500 per kilowatt hour at 40 gigawatt hours once they do hit scale. Now they've proven that they have not proven that they can achieve that scale on a sustained basis right now,
Hmm.
but they're going to get there. Like Tesla's very good at manufacturing and figuring this stuff out. So in my mind, it's kind of a matter of time. But the one thing that I think might have escaped people's notice, and I want to proceed with a little bit of caution here. But there was apparently a data leak, like a privacy breach on Tesla's website on the Megapack design page. So there was like pricing
Really? A
and kind
design
of
breach? Like what is it? I think I saw something in like one of the chats, someone posted something about this. What
yeah.
was that
And so
about? Like there was some code leak or something?
Rob Mauer covered this, and
Oh yeah, I
I
heard
think
that too.
there's reason I think we should be critical of the way that this zero sum game person put this information out there. But I think it's a noteworthy story, and so it's probably
Mhm.
worth people at least taking a little bit of time. But
Yeah.
essentially, and I'm not a technical kind of coding guy, so take this with a high level understanding. But
But the data in this code is sort of your specialty at least, right? With the
well, yeah,
pricing and
yeah.
energy and stuff. So it was
So
good for you to come across it, I guess, to kind of analyze it.
So somebody who's and I'm not going to name any names, but somebody who's very trusted has kind of confirmed that this website, the Tesla Megapack, designed website, actually did have data that appeared to be from Tesla's kind of internal cost accounting, um, in like I guess software. And so
Mhm.
it showed that the implied gross margin on these Megapacks was 60%.
Wow.
Now that doesn't mean that they actually are, because just from an actual accounting perspective, you can't have like a cost of goods sold on an item you haven't manufactured yet. Like you actually
Mhm.
have to have the labor and all those things that are to the penny, how many costs you've incurred, and then you kind of divide those by the
Do
number
you
of
think
products that you've shipped or whatever.
Do you think this number could just to stop you real quick? Do you think this number, if it's officially a Tesla metric, that's like 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 we're saying or theorizing, do you think that the way Elon works and models things like see him do it with the factory, like the alien dreadnought factories? Like, what's the theoretical physics limit to how fast these cars can produce?
Yeah.
Speed wise, with all the space being utilized. Do you think he has like people within his teams model out like projections? What's a theoretical gross margin limit given the supplies and everything going perfectly, what it would be? And do you think that's maybe what this was? Something like that?
Yeah, I think so, and it makes sense too. Like if you've got a salesperson, for example, and you
Mhm.
want
I mean,
them
it's not going to
to,
happen, but it's a theoretical limit, maybe, let's
yeah,
say, right? Okay.
yeah, but like even just for like if you're selling something and you know that you can negotiate a discount with somebody, but
Hmm.
you want your salesperson to know that, like, if they negotiate like a 10% discount, that you're not, if you have a 5% gross margin, then you just negotiated away your whole like margin.
Yeah,
So
yeah.
there is reason to have like a good like estimate of what your margins are. But 60% is like ridiculous.
But this is like if
It's
everything goes right with like getting the cost of mining down to the
Yeah.
theoretical limit and all that. Maybe that's what this is. That's what I'm
Well,
saying. Like, it's
maybe
probably
that's
not
it,
going to ever be that. But
but it also wouldn't make sense to have that in your code right now. Like that could be like something in a master plan, but it wouldn't make sense to have that like in any sort of like accounting methodology. So I think the implied claim from
Mhm.
this was that the facility is ramping up very aggressively right now. So they might be able to do. I think his assumption was 10 gigawatt hours this quarter. I think that's absolutely crazy. There's no way they're going to do that much.
Wow. This
For reference,
quarter.
they did 2.1 gigawatt hours last quarter. So
Okay.
so so,
So
so like
fourth quarter,
5x
10
that.
gigawatt or 10 in first quarter.
Fourth quarter. So this is another reason I think some of his numbers didn't make any sense, because it was the implied or the total capacity at Lathrop is 40 gigawatt hours. So 10 gigawatt hours is like maximum capacity, and I think he actually assumed
Per quarter.
10.1
Yeah.
per quarter. Yeah. So like if there was a huge amount of inventory that was shipped, because there is some kind of like revenue recognition where you have to actually not only make these things, but you have to get them to the customer site and install them and
Mhm.
hit what's called in the energy industry COD, which is when the project is actually commissioned. So there's definitely like a kind of a longer process to get to revenue recognition on these. But even still, like I think going from 2.1 to 4 or even 5 would be like a tremendous accomplishment, but to scale up to 10, just like that's not accurate in my mind. Possible, but I would certainly bet against it.
Yeah. And are these
um
all are they all is all the mega packs going to be 4680s? Is that what they're all supposed to be or
no, I don't, no, because I think the 4680s, I think it's These Megapack XL, I think they're iron based.
There's nothing
The kind
different.
of battery
Titanium,
chemistry is not my
chrome.
specialty.
Okay.
But with stationary storage, you don't need kind of to prioritize performance as much as you do like weight is not a consideration, for example, because it's just sitting there, and it's not going to reduce the performance of your stationary storage battery if it weighs more. Like there's some slight considerations with like the foundation, but really the types of chemistries that you need for stationary storage are a little bit different from kind of performance optimized stuff. And weight, like energy density is a lot more important for vehicles.
Mhm.
But anyways, I think that, like, I was even thinking a 25% gross margin was a little bit of a stretch. But then when you
Mhm.
start looking at the actual incentives, and so there are some studies that I've been looking at for a long time of like what is the total cost by component of stationary storage. And so like the cells, I think, are typically like around $150 to $200 per kilowatt hour. So roughly
Mhm.
half the cost. And then you got, inverters and racking, and the installation cost is a really big one that a lot of people don't take into
Mhm.
consideration. But if you think of like what Tesla is doing now with like we already know that they're in the $100 per kilowatt hour range, probably a lot lower than that now. So like they're cutting the most expensive item, roughly in half from kind of where the industry standard is. And then if you just have a bigger battery, then you're kind of amortizing all the installation costs and a lot of the other cost components over a bigger kilowatt hour or megawatt hour pack size. It can do a lot to really achieve economies of scale. And then if you layer on top of that the incentives in the Inflation Reduction Act, it's just like free money kind of piled on top of that, and that can really kind of change the margins.
Yeah.
So I've been skeptical of energy gross margins being a meaningful contributor anytime in the future, because they just haven't been historically. Like I think in Q2 they were 11%. In Q3 they actually doubled the amount of storage they deployed, but their margins shrunk to, I think it was 9%.
Mhm.
So they haven't proven that they can do it.
Mhm.
But I do think these revelations, while I think the conclusions are a big stretch to say the least, that doesn't mean that they're entirely worthless. And it wouldn't surprise me if energy gross margins really start to surprise. I'd be more optimistic about Q1, but we might see a pretty significant ramp up even in Q4 here.
Yeah, well, we'll know in a month from now when they do earnings. Less than a month from now, we'll probably get the earnings report. I would think, that third Wednesday of January or fourth Wednesday of January. So, yeah, I mean, it's exciting to see the energy margins potentially increase. I mean, 60% just seems hard to believe. Like maybe that's just like the theoretical limit if everything is perfect. I'm thinking, but that just seems hard to believe, but it seems like a possible case here. Hopefully, we're surprised. We're all surprised, and that's the case. Yeah, we'll find out.
Yeah, I mean, they couldn't come at a better time, that's for sure. With the energy or the automotive business really kind of apparently sucking wind with all the concerns with China and price incentives even in the U.S. That's clearly what's driving the stock. So you could just imagine if we do have some sort of good news now, like great news in my mind would be like a 15% gross margin or something like that,
Mhm.
with kind of a pathway to get to 25 and beyond. And
Yeah,
they spend a decent amount of the earnings call kind of talking about how that's going to meaningfully kind of
yeah,
supplement the earnings going forward. I think that'd be
yeah,
great news, because then all of a sudden analysts would have to start adding that in some of the slippage in EPS. I do expect that EPS estimates are going to be reduced in the next couple of weeks or so, just as analysts kind of forecast more of an automotive slowdown worldwide. But if you've got something kind of sneaking in the back door to supplement that, that's really meaningful. And David
yeah.
Kasman in the comments here, hey David, has a really on point comment that the megapack demand shouldn't be affected by recession. This is so true. So the energy market right now is ridiculously strong. Energy wholesale prices have just been skyrocketing, and that's actually really good news for batteries, because you in the old days, like 2 or 3 years ago before COVID, energy margin or any energy wholesale prices might kind of vary between, say, like $15 a megawatt hour and 35 or something like that. And now we're
Mhm.
seeing huge swings up to like $100 on a pretty sustained basis, which is just crazy.
Wow.
So like these that makes the economics of batteries definitely more robust. But then utilities are also not kind of recession. They hardly get impacted at all by recessions.
Maybe a
So
recession. You say that the megapack demand would be higher in a recession, as businesses, municipalities are looking to cut costs or something, and look
yeah, I
towards
mean,
megapacks.
it can certainly be a cost-cutting mechanism because in a lot of situations it's going to be the lowest cost alternative. But then utilities, in particular, they pass all these costs on to their customers. So they really they might see their demand decrease by like 3% or something like that in a severe recession, but their earnings don't decrease by 3%. They kind of just
Yeah.
are all the actual energy costs they pass on to the customers anyways. So it's
Yeah.
a
Have you talked to
whole
Mad
interesting.
Manx about this leak of the megapacks, or have you seen his feedback? Mad Manx is someone we
He
had on our energy roundtable discussion a month or two ago. He's pretty well informed on this stuff. What does he think?
I didn't see his take on that actually. So yeah, I'd be curious if anyone has
We should
seen
touch
that.
base with him. Yeah, I don't know if he has commented. I haven't seen him commented on it either, but we should touch base with him on that and get back to it, because he's usually got interesting insights on all this. Yeah. So anyway, so I guess next thing about the Tesla business that's related is Tom Zhu, right? I mean, he was just taken off apparently as like a legal representative for Tesla China and Shanghai or something. It's some type of formality, and it's nothing really to negative, but maybe it's a formality to prepare him for a bigger global role. I'm sort of speculating. I see a lot of people speculating, and we've been talking about Tom Zhu and for a while now, and it just seems like increasingly likely that the writing's on the wall that he's in line for a bigger and bigger role at Tesla. And I wouldn't be surprised to see him named as global CEO of automotive manufacturing, something like that, or just even global CEO. Who knows?
Yeah.
Sometime soon. He's traveling to Austin and Fremont back and forth now, and yeah, he's like a legend in Tesla Shanghai, and we actually are going to interview our source who knows of Tom Zhu very well this week, so on our channel. So please make sure you let us know any questions on the YouTube comments and Twitter threads that you want us to ask. We've already collected some, but we'll certainly ask more. So what do you think about that? The Tom Zhu kind of that little
Yeah.
change.
It seems like if this was just like pure speculation, it probably would have been stamped out by now.
Mhm.
But instead, it seems as like we're getting kind of more data points that this could actually be credible. So I don't know.
Mhm.
If we hear him on the Q1 call, I'm going to call game over, and like
Yeah.
it's very
Well,
clear.
I think they would put it as part of the Q1 annual letter, like Tom Zhu is taking over. I don't know. I feel like they could lump in a bunch of things all in that, including like the next Gigafactory in Mexico and Tom Zhu taking a new chapter of Tesla, Elon still being there for, product architecture and AI and FSD leading those things. I just feel like there's something that I could see that being the case for this kind of annual letter kind of
Yeah.
announcement all at once. Well, we'll see.
Yeah.
So yeah, that's very interesting. But I guess the thing everyone here is most concerned about, is at least you and I are, and I think almost everyone who's following us, is a stock. Tesla is a stock, right? And the business and the stock are two different entities, or two different things. We lump them together. They're related in the long run, but in any short given amount of time, they can be very different. Um,
Hmm.
the stock is just a reflection of the supply and demand of the buyers and sellers at any given time. And the stock has been crushed. What are we at right now as we're talking? It's 113.
113.
113. My gosh. I mean, the volume has gone up. We've been talking about that. The volume is already 130 million shares, like not even halfway yet through the trading day. I mean, are we going to be at 250 million shares today? That would be insane. That would be crazy. I mean, it just keeps creeping up. And the only time this is what I'm thinking is, I mean, there's so many retail investors, and I don't think retail investors are selling, but there's so many retail investors that have been owning or long Tesla through call options, including our fund, and personally to some degree, us, and in the past personally to a large degree. And I think there's a lot of people on Twitter or people we see, everyone's heard stories of making a killing buying call options, and has bought a lot of call options of Tesla. And those call options are becoming worthless, right? So if you bought, $100,000 or of Tesla call options, 2 years ago, and now it's worth $10,000. You didn't sell Tesla, but really it's like you sold $90,000 worth of Tesla in a way, because the options market makers on the other side, when you buy those call options, they have to delta hedge. They sell it to you, but
Mhm.
they're not selling it at a risk. They're selling it and hedging it with delta neutral Tesla stock trades. They buy Tesla shares to offset the delta. And so as Tesla stock goes down, they close out their long Tesla shares to keep the hedge delta neutral. And so now it's like they have 1/10 the amount of Tesla shares in this example than they used to have for hedging your call option trade. So, I mean, it's sort of like everyone who's been buying call options all this time is now selling the stock automatically, and just like it's just
Well,
a
that's actually
snowball
it,
effect.
it
It's like the opposite of a
it's
gamma
a
squeeze.
Oh, it's a reverse gamma squeeze. That's exactly what I was going to
Yeah.
say. I mean, it's you know, the market makers who, to your point, have to be delta neutral. If as the price goes down, then they need less delta exposure, and so they have to sell in order to remain neutral. They just have to. Like that's
Mhm.
kind of what I think juiced it on the way up, and I think you're probably right that at least to some extent, it's accelerating on the way down. And then like if you go down 10%, then you're, depending on your maturities and your strike prices, your options might go down 20 or 30%. And so then you have to sell some more if you're trying to maintain neutral delta exposure. So that certainly, I haven't seen any analysis that would be contributing, but I think it certainly has to be contributing to. I mean,
Yeah. I
theoretically
mean, we
it
know so
is.
many people own
Yeah.
so many call options, and people don't like typically sell their call options on the way down. They kind of hold on to them. I feel like a lot of retail investors, we kind of just hold on to them in hopes that they'll one day be worth something again. And then maybe you sell them for like a tax loss harvesting when it's worth like $1 at the end or something. I don't know. But I feel like most people just hold on to their call options. They don't like, it's not like buying and selling stocks. You're like down 10%, let me sell it now, or up 20%, I'll buy more, whatever. It's like call options, you're kind of in it a lot of times for the long run till expiration, I think, so people are just, all these call options that have been bought on Tesla are pretty much close to worthless, or becoming, I think they're going to be worthless probably, right? I mean, it's just, unless Tesla has a V-shaped recovery very soon.
Well, I don't. So I'm skeptical of that. Yeah, I think I've been a little
I'm
bit
talking
more
about the call options
optimistic.
that expire like this January
Oh,
and
sure. Yeah, yeah, yeah.
June
If
coming
you
up. I
bought
mean,
them
people
2
that
years
bought,
ago, then for sure.
yeah,
Yeah.
people bought them in a year ago, even, a year and a half ago. Most of those expiries are like this January or this June, for example. Like it seems like very unlikely that this January, this June, Tesla's going to be back above like 250 or 300 a share, which a lot of these call options would have been bought at, you'd think.
Yeah, I mean, it's crazy. I mean, I was just looking at September 20th. We're down 63% since then. It was above 300. And so the kind of crazy thing to me is that all this like drastic, like the floor has fallen out from the bottom of Tesla stock, has all happened with very little kind of fundamental news. It's all been on concerns and rumors of like Shanghai production being down and COVID scares and pricing, which I think is legitimate. But at the same time, we've been talking about how prices were going to be decreasing all along. So
Yeah.
it wouldn't surprise me if they still just kind of keep plugging along, and I'm sure margins will get hit a little bit because of the recession. And Elon has certainly tried to warn us about that. So I don't want to be kind of like naively optimistic about this. But to me, it wouldn't surprise me if we get a couple good quarters, and things are not nearly as bad as maybe the kind of
When the
current
dust
panic
settles.
might have you suggest. And okay, maybe 400, which we started the year, was too rich, but with in the midst of a recession, Tesla's relatively robust, and so maybe like 300 is actually within reach. So I
Mhm.
mean, this is not predictions, and definitely don't trade on this, but it wouldn't surprise me if we kind of realize a couple months from now that this panic reaction in the span of just 2 months was a little bit more kind of emotional and momentum driven than fundamental driven.
Yeah, but yeah, I mean, I want to believe that, but a big part of me has to accept the reality of what's going on in
For
the
sure.
stock. And the reality is there's more sellers than buyers. And I think there's, you add in the call owner, the time decay and the delta going down on all the call options, and that forcing option makers to close out a lot of their long delta neutral hedges of Tesla stock, millions and millions. I mean, Citadel and Two Sigma, those like two of the main options makers, market makers. I mean, we'll see. I remember on the way up, I think Citadel was accused of some like kind of shenanigans to try to control the gamma squeeze, because they were caught on the way up before the Tesla stocks, like right after Tesla announced its first Tesla stock split like 2.5 years ago. I remember that. And Citadel, did some shady, people speculated that they were like causing some drastic down prints, after hours, so they could close out of their, shares that they're caught up in a gamma squeeze on, being long on. So it's almost like the reverse gamma squeeze maybe going on to some degree.
Mhm.
And who knows how long that takes for the dust to settle. I mean, certainly on the way up, way back then, the stock went up like 3 or 4. People kept thinking that, oh, this must be the top. This must be the top. And it kept going up and up and up. And so on the way down, it's like the same thing. We're like, oh,
Yeah.
it can't go much lower, can't go much lower. But there's just a supply and demand imbalance. And then you add in like a few institutional investors. If there's net institutional investors selling versus buying, you'd think there'd be some net buyers seeing value here, but maybe not. Maybe net overall, there's like sellers just like, get me out of some of this Tesla with Elon or whatever,
Yeah.
maybe, and
Well,
China concerns. And now you just have a recipe for a really irrational stock price in the short term. Margin balances also, I had like my personal account, I had like a 5% margin balance. That's like a 20% margin. I thought I was clear with 5% margin balance. I was like, whatever, 5%. Now it's like 20 or 25. I'm like, what the heck? How's my margin balance crept up? I'm like, this is getting stressful for me. I should have made it 0. Why did I even keep it at 3 or 5% or whatever it was? Like, it's just like,
yeah.
it's just, I think a lot of
I've
people are
always
getting caught
thought
in this.
margin doesn't allow you to sleep well at night, because that can happen. But I don't know.
Yeah.
It's obviously
Yeah.
very,
I
very
think a lot of us are in
personal.
the same boat.
But yeah, no, for
Yeah.
sure. And the other thing I would say though is, like on top of maybe the market being irrational, I think there is a pretty significant cohort of institutional investors who actually thinks that Tesla should be trading at like a PE of 10 or something like that, kind of more in line with an automotive stock. I mean, there's a lot of people who have just thought, yeah, Tesla's got a great product. I'll give props to Elon, but at the end of the day, this is an automotive product, and they're about to get hit real hard in the face of a worldwide recession. So it should revert to a PE of, I don't know what Ford is, like maybe at 8 or 9 or something like that. So give Tesla a little bit of a premium at like 10, or maybe if you want to be optimistic, like 15. And so I think there's very serious investors out there who think that is a reasonable kind of multiple, and that would drive the stock down, between say $50 and $100 a share. I think that's kind of crazy, but we're kind of heading there anyways. And so I think the real question is, can it stay down there, or where does it, like when you said, I liked it when you said, when the dust settles, where will we be? And I think clearly nobody knows that right now.
No one knows.
But the short sellers, and the bear camp certainly has the better of the argument for right now.
Yeah. In the short term, the stock is clearly going down crazy amounts. And what's crazy, then I started pulling up, like, I'm like, man, I need to hedge some of my Tesla, maybe buy some puts or something. The puts are so expensive. And I'm looking at the options probability lab on Interactive Brokers platform that we cite sometimes. And if you look at January 2025 for Tesla, the 50-50 probability for option, they take the options prices and dictate what the actual probability of the Tesla stock will be at based on the options pricings that the market is pricing. The 50% the over under is $90.
What?
2025, January 2025, the over under is $90 for Tesla. Yeah.
Oh
So there's
man.
a lot of puts, hedging going on as well, it seems like. And then that those puts add into the gamma reversal squeeze, if there's because I heard there's a Spot Gamma did a big thing about how in January there's a lot of puts expiring for Tesla or something. I don't know if you saw that, like the Spot
No,
Gamma
I didn't see that.
analyzes all the options analysis of all kinds of stocks, but especially Tesla. They did a quick report on that last week saying that there's a huge amount of puts for Tesla expiring this January. So it's just a lot of interesting stuff going on in the options market. I mean, there's a spike for like a bankruptcy of Tesla for January 2025. Did you know there's a 10% chance that Tesla's going to be at $20 a share? in January 2025, according to the options market.
according to
Isn't that
the
absurd?
options.
Is that absurd? It's absurd.
I
I mean,
think so.
you can sell
Like,
Tesla $20 puts for $1.50 or $1.60. $20
oh
puts
my
for
gosh.
January 2025, like $20. That's like 60 billion market cap. 60 billion. That's where they were like 3 years, 4 years ago. That's crazy. I mean, how is that?
Yeah.
Like they'll be making more profits than that. Their PE would be 1.
That's exactly what I was just thinking. Like, I think they
Yeah.
might be doing 25 of earnings per share by then. Like,
Yeah, how is that great? I mean, if you have cash on the sideline, you just want to earn like interest, like you could just like that's it seems to me like a no-brainer. Like you just sell these puts for $20, like $20 puts for January, unless there's something really Enron like about Tesla that we can't figure out that like is gonna make it go bankrupt, which I don't know. We spend like 10,000 plus hours studying this thing. I don't think anyone's figured out any I mean Jim Chanos has tried, but everyone's debunked everything single bear thesis. So it's just crazy. The $50 puts for January 2025 are $8. $50 puts for January 2025, $8. Eight.
that's, yeah, it's a good time to have dry powder.
Yeah. What's the percent? Well, I mean, 8%, $8 of 50. That's like
The
16% over
16%.
2 years.
Yeah.
So it's 8% a year, or maybe like 7.5% a year if you compound it or something like
Compound.
that.
Yeah.
So that's really great return, like guaranteed in my mind. I don't know. This is not investment advice. I mean, God forbid someone puts some down their life savings on that, and then somehow Enron, like you told me that. So I don't know. I mean, no one knows for sure, but we study this like crazy, and it's just I can't believe the puts are like pricing that in. It's nuts. So yeah, I mean, I'm looking at the 10% probability on the upside for the 10% probability on the upside for January 2025. Guess what that number is, Matt? What do you think that is? What does everyone in the comments think the 10% probability of where, like on the upside, what's the 10%
And
chance, that best 10% chance that it'll be above what number?
uh,
What do people think in the comments?
I'll say
The options market.
I'll give the comments just a second without looking. And I've got all right. I'm gonna say 290.
Very close. 270.
270.
So
Okay.
yeah, you're very close. Wow. You're on the ball. And the 5% is 360. So the options, the call options are pricing in a 5% chance that the stock does not go above $360 by January 2025. That's 2 years from now. So I mean, this is just crazy to take in this information when you think about it sometimes. And so you kind of have to reframe ourselves. Like there's someone wrong. Either the options are super wrong or we're super wrong. It's probably a combination of the
Yeah.
both. So you got to figure out how much are we wrong versus how much are these options wrong, and adjust our worldview about the stock prices based on
Yeah.
what ratio we're wrong versus the stock. And then, the interest rates to the Fed obviously plays a big role in this too.
It's interesting looking at the comments. Most people kind of thought it would be $200 or lower on
Whoa.
the top 10%. So,
Yeah. Well, I
yeah,
think maybe some
that's
people are misunderstanding the probability lab distribution.
yeah.
How
I've got some
normally it would be like,
practice.
yeah, no, yeah, we've been looking at this a lot. Normally, it would be like somewhere close to where the current price is at the moment is the 50-50 probability normally. It's normally not up or down more than, 5 or 10%. So right now, the 50% probability is like 30% down of where we are right now at $90,
Yeah.
25% down. Yeah. Something like that. So that's kind of crazy. Anyway, I just wanted to get that in there. I thought that was interesting. Hopefully other people, we'll probably I'll send a screenshot up of that on my Twitter profile later. The probability distribution. It's crazy. It's like, it's not a bell curve. It's like, it's just a tail going up,
Yeah.
up and up. And then at the very end, there's a spike at $5 to $10 where it's like bankruptcy potential, 10% chance.
Yeah.
I'm like, what the heck?
It's kind of interesting to look at like the skew of these, and there's pretty fat tails on these. So like, I don't know, like the $500 price, I'm guessing that's like if 90% was 270, you said, and then
Yeah.
5% was, what was it, 340 or something like that?
360,
What did you say?
360.
360. So then like 500 is probably only like 2% or something like that. So like
It's close to 1%. Yeah, about 1%.
it's very hard to kind of get to like the less than 1% probability just
Yeah.
with the way that they price these.
Yeah. I mean, listen, everyone who's listening to this, we're all mostly Tesla bulls, right? We have to seriously take a look at ourselves and reflect, like, Are we really right? Are we better than the markets? Do we understand this better than the markets? Or are the markets, do I have to listen to the markets? Are they telling me something, the probabilities that are being priced in the markets right now, is that right? How far are we? We're so far disconnected. Both probably are wrong, but who's more wrong? So it's like it's sort of a good humbling exercise to look at these things when you can realize like, hey, this is like there's unless you really believe like a million Tesla retail investors know better than all the options market makers and the people playing the options combined. It's one thing if there's like a couple people, like in the what's that Michael Lewis book with the Big
The Big
Short.
Short.
It's one
Yeah.
thing there's a couple people that know like some secret, right? But it's not a secret. Everything we know is not a secret. So we just have to like we're in just some kind of tunnel, and there's like mass psychosis within us. So we have to realize like this is a new reality we're entering here, and maybe Tesla will be a 20 PE stock for a few years. Who knows? Or maybe it'll be a 15 PE stock. I don't know. It just seems like it's entering, like you were saying at the beginning, Matt, that the market is revaluing Tesla from a tech growth stock to like an automotive stock or something like that. It's like crazy in a way to us, everyone here, because we all think of Teslas like, so in the end, the business will align with the stock. So eventually Tesla will generate enough revenues where they buy back stocks and do dividends or whatever, where the stock price will be drifting up on that for sure. Even at a 10 or 15 PE, if that's the worst the market's going to give it, like maybe we're in a new era of interest rates being at 5%, and that's what happens. So but in the next 1 or 2 years, we just don't know. I mean, these markets, these options
Yeah.
market pricing in something crazy here.
Yeah, I get optimistic though, because like even at a 20 multiple, I think we still go up from here.
Yeah.
Assuming that the fundamentals don't completely deteriorate. So,
Yeah. And on the
um,
way down, you have to say, like, I've been around long enough with Tesla, especially where on the way down like this, when you have a major capitulation event downwards or upward, then there's always an overcorrection. You just don't know where the dust settles on the overcorrection. Are we going to go down to like $60 to $80 per share, like briefly, and then come back right back up to $120 and stay at like $120 to $150 for a long time? Or are we going to dip to like $100 and stop at like 125, go back to 120? Or are we overcorrected now and about to go back up to $150 per share, and stick around there for a long time? I don't know, but there is going to be an overcorrection. I just don't know where we are on that curve, but it will happen to some degree, I think, for sure.
yeah, okay.
That's my
It's going to be
prediction.
interesting. Like this whole year has just been so surprising. I mean,
Hmm.
it's uh it's been so volatile. I mean, it was clearly volatile on the way up, but it's just like the magnitude of the drop has been pretty breathtaking.
Yeah.
Um,
Yeah.
but so, Emmett, I had another kind of question. You were on a Spaces with Elon last week.
Yeah.
What was that like?
Oh, that was crazy. I was up late or like in the evening, like getting ready for bed or whatever. And I saw Spaces pull up with George Hotz, and I know George a little bit. Me and Dave Lee interviewed him like a couple of years ago or a year and a half ago, and I've been following him and closely and respect him a lot. And so I joined his Spaces, and he had just resigned from Twitter. He was talking about like the philosophy of doing more with less engineers, or what's the right amount of engineers to do something like as big as Twitter or whatever. I don't know. And he was like debating with people about that. And I was asked him a question. I got on the speaker list and asked him a question like, what do you think about Elon's, morale right now? What's it like at Twitter? And he's like, oh, I can't talk about Elon. I had signed an NDA. I'm not there anymore. And sorry, I can't, bro. I can't talk about that. And I respected that. So I didn't stop talking. And then he was like a couple minutes later, I was still listening, doing other things. He was like, "Oh, anyone who's speaker and doesn't really have a question to ask, please step down," because there was like 10 or 20 speakers up there, and much of us. So I just was like, "All right, I better take myself and make myself a listener." So I made myself a listener, and then like no later than like 2 or 3 minutes later, Elon shows up, and I'm like, "Oh, I just took myself down. I was a speaker." And Elon shows up, and George's like, "Oh, hello, Elon." But then, sure enough, like 30 seconds later, somehow I'm teleported back up to be a speaker. I don't know how. I think George remembered my question maybe and put me up as a speaker again. So I was like, "Oh, cool." And so then I waited for my time to, punch in a couple questions. But there was a guy in the very beginning that was really like in Elon's face about like, walk us through the system architecture from A to Z. Come on, you're so smart. Tell us, tell us. And Elon would try to answer, be like, no, tell me from A to Z why you need why you need to start from scratch. And Elon's like, get off who's this jackass? And George's like, sorry, I'll take him off. And some guy he was like slurring his speech and stuff. I don't know what the deal with that guy was, but he was like really in Elon's face out of nowhere. So Elon was like on a defensive footing, I could tell. So I didn't want to like go outside of my bounds and talk about something not Twitter related at that time after he was already kind of like probably defensive from that weirdo, like trying to get in his face. So then when my time came up, I was just like, yeah, what about some kind of option for, advertising free Twitter paying, some people could pay a higher price, for that. And he was like, yeah, we'll do that. And then I asked another question about like trying to like gamify a referral program to help bring more Twitter users on, because a lot of people have a hard time figuring out how to get onto it. And if there's some incentive to get other people into using Twitter, then maybe it would help it grow much faster, Then he went on to kind of a long tangent about some other stuff. Anyway, that's a long story. It was really cool to be on the Twitter Spaces and ask him a couple questions live, though. It was neat.
Yeah, it's been, I think we've been critical of Elon the last couple of weeks because he's, it seems he's been, off in the woods, kind of doing stuff on Twitter. And meanwhile, Tesla's just plummeting, week after week, and there was kind of no comment and no visibility on what Elon was talking about. So I thought it was good, and on that Spaces was a little bit more Twitter focused, but he hopped on the other one with Omar and Gary, and that really Tesla good. Talk one. That was a great one. And then he was on the All In podcast as well, kind of talking about some of the stuff more Twitter focused, but kind of hearing him kind of speak in the way that we always used to hear him speak of like, no, I'm just doing things and I'm not neglecting any kind of duties that I have to Tesla. Like the team is just continuing to execute really well. I think that's like all we really wanted to hear, I think, is just that, he's still like focused on what's going on there. So I found it pretty reassuring just to hear him talk about, some of the normal stuff going on at Tesla and what he's trying to do to kind of help prepare for potentially a bad year or two coming up.
Yeah. And it's reassuring for us with the business. I mean, we know the business for long-term stockholders. This is fine. It's reassuring for sure. It doesn't help us, anyone who's short-term invested or using margin or call options. Obviously, we're all super bummed and it sucks, but in terms of Elon and the business of Tesla, I couldn't be more confident from that as I am from right now, So why don't we do a bunch of Q&A? I mean, there's just so people know we're live on our YouTube channel with, 800 or 700 or 800 people watching. And then our YouTube Spaces or Twitter Spaces, also a bunch of people listening. So we can't do questions on Twitter Spaces like most people, because we're broadcasting on YouTube Live or YouTube recording channel as well, and they wouldn't hear it. But we have a bunch of questions we've taken down in the Twitter threads and the YouTube comments. We'll try to pull up and go through as many as we can for the next like 20 minutes or so, Matt. Does that sound about right?
Sure. Yeah, that sounds good.
Yeah. All right. From Tesla Doodle on Twitter. Interesting name. Cool. Hey, Emmett, do you ever give near-term price targets and probabilities attached to them for the share price? I have done that on occasion, or my estimates. Ever since I launched this hedge fund and took on outside investors, I've kind of been more reluctant to give my probabilities. I kind of reserve that for just investing in the fund, but it hasn't worked out well. Unfortunately, I mean, I've been bullish all this time while Tesla's been going down. The probability lab with Interactive Brokers is a great tool. It shows you what the option, like what I like to do is, I used to bet on sports a lot and like, not a lot of money, but like, $10 here, $100 here or whatever, in my teenage and 20s and stuff. And I would follow NFL football a lot very closely, or maybe NBA basketball or college basketball too sometimes. But I'd look at the betting odds, or I wouldn't look at the betting odds. I knew enough about the betting odds to like know how they price it. But then I'd look at the matchups the next week, and knowing what I'd know, I'd be like, well, I think the 49ers beating the Giants in New York, the chances are probably 60% chance, given how good they. And then I'd look at the Vegas odds, and if the Vegas odds priced it at like 80% chance, then maybe I'd go the other way and buy the Giants, chance to win 20% chance, even though I think it's a 40% chance, So that I'd look for mispricings like that on things I think I know. So with Tesla, I've been doing that where I look at, all right, where do I think Tesla's going to be, 1 or 2 years from now, typically. Sometimes I do shorter term, like with S&P inclusion or something like that. But shorter term is much harder to predict. It's always, and so I look at those odds, and then I look at the probability lab of Interact, where it shows what the actual mathematical probabilities are based on the option pricings to try to figure out. And sometimes I'm wildly off. Like right now, I think it's like a 20% chance Tesla will be above $500 a share by January 2025. Like that's where I put it at. But the options market is pricing at 1%. I'm like, wow, that's a big difference, So if I had dry powder, I would probably do something there. But I could be very wrong, of course, right? Anyway, that's a good question.
Yeah, but we don't like to put stuff like that out there very often because you don't want people trading on that, and I think it's very open to your own risk tolerance too. Like I think everybody got very excited about options after seeing some success of people like Emmett, and there were lots of others beside who had done really well. And I think a lot of people that might have followed in later that maybe weren't either didn't understand the risk exposure of options or just timed it differently. Can get hurt. So I think we're reluctant to do that broadcasting out to a.
We don't want to encourage
audience.
people betting with options. People get out of when you have a 20%, there's still 80% probability you're going to lose it all on that, right? It doesn't mean, it just means if you did that maybe 5 or 6 times, you'd win one of those times, and then people go crazy. People don't know how to. It's taken me a long time to set aside a separate amount of money where I do that with. And that's the most I'll lose doing that. And that's been the vehicle what the fund has been for the last couple of years. And it hasn't done well. I'm glad I created the fund to keep that as my vehicle for that. Because if I'd been doing that with my old personal account the last 2 years, I'd be like, oh my gosh, I'd be completely wiped out by now. So, it's important to compartmentalize that very risky kind of betting strategy into a separate bucket that you don't, mingle with your personal savings, I would say.
Yeah.
Anyway. Next question from Dean Rockfuss on Twitter. How low could average sale prices and margins go in a bad recession? What do you think, Matt? This is kind of up your alley. What do you think? I mean, Elon said he might, sell cars close to, even because of future full self-driving profitability, right? He said something like that. I mean,
yeah. So that was, I think it's important probably not to take that out of context though, because, he was, I think before he said that, he was talking about how if you're like basic econ 101, if in a recessionary environment, in order just to sell the same amount of cars next year that you sold last year, you would have to lower the prices just because, like the price curve or the demand curve has shifted down. So that of course makes sense. But Tesla is in this situation where they're actually adding production. So like they're shifting the supply curve up, which on its own will reduce the price equilibrium that buyers are willing to pay. And on top of that, you're incentivizing or there's a recession. So you've got kind of a unique, if you just think about it from an econ 101, you've got a shift up in the supply curve, which drives down price just as new factories are coming online. And then you've got a shift down in the demand curve because of the recession. So like this is a very real concern. And I think this is what's driving the stock getting hammered so much. So the market's essentially worried that Tesla's going to have to price away all of its margins. But I think it's also important to keep in mind that Elon said that they're now seeing kind of deflationary forces. So what we saw on the way up when they were raising prices is their margins improved, but they were also, their cost of goods sold really skyrocketed. So I think what's going to happen, my take, and I could be wrong, but I think what's going to happen is that their cost of goods sold per vehicle is going to start coming down next year, both as these factories ramp. And they're kind of, doing more stuff to kind of optimize the costs. I mean, they're not paying overtime in Shanghai right now. They're apparently it seems like their supply costs are coming down based on Elon's comments. But that was the kind of the context that Elon was talking about. But if you figured they've got somewhere in the neighborhood of it's like $12,000 of gross profit per vehicle. They could lower price by that much and be at break even. And I don't think they need to lower lower price by that much. Just as one interesting data point, the $7,500 promotion that they ran, at least here in the United States, that seemed to do wonders for triggering demand just based on kind of watching the trends in inventory. That completely evaporated all the inventory. And we're coming into a spot next year where like the buyer is going to get that incentive already. So I think that was a really telling data point where, Tesla can probably keep their prices close to where they are in the US, maybe drop them a little bit, and have very good kind of demand situation in the US. Europe also has very high levels of demand, it appears. I mean, just looking at the way that they're priced higher than ever right now. So China's the one that seems to be the most concerning. Um, but the fact that you can still maintain positive gross margins at $7,500 price cut from now, and that's really did a lot to stimulate demand. To me, that gives a good indication that margins are not going to go to zero or anything like that. So I think maybe assume a $5,000 across the board price cut or something like that to get to,
Mhm.
I don't know, production and deliveries of 1.9, 2 million, something like that. Kind of
Yeah.
lower your expectations, and I think you'll be fine. Do you
Yeah.
have any thoughts or things
Yeah.
to add
And
on
if
that?
I agree on that. I would say the wild card, which is a demand lever as well, is the technology upgrading in Tesla's, primarily the full self-driving capability. If that gets better, I think the demand continues to go, word of mouth gets around, like Uber drivers, DoorDash drivers, delivery driver, lots of people will prefer just using Tesla's FSD capability while they're doing their daily commutes or work if it's relaxing and works well, and it's on a route that they continually go back and forth on. For example, I know I certainly love using it on routes that I'm very familiar with, and I use it on a lot. Sometimes it's the new routes that you're a little more careful right now still on to see how it reacts to certain new turns or whatever that you haven't seen it do. But I think as people get more comfortable and word gets out, that could be a incremental demand lever to kind of offset some of the nice needed um, price cuts that would otherwise be needed to keep demand high enough to fulfill this increase in supply Tesla's going to have for 2023. So I'm not as worried. I think there's um yeah, I think that that's going to change everything, and I think more people are going to want to leave gas cars. I mean, it's just adoption is happening. Gas prices are very volatile. People are sick of paying 100 or 200. I've seen, I was with a friend in a pickup, and he spent like $150 filling up his tank the other day. I was like, what the heck? That's crazy. I don't remember having a
Yeah.
gas car spending more than $50 to fill up my tank ever. And it's just expensive now, and people are going to say, forget about this. I need an electric car. They'll look at all the options, and there'll be a plethora of used Model 3s out there and Model Ys as people upgrade to newer versions. And it'll, I'm not worried about demand in the US, to be honest, or too many price cuts now with the Inflation Reduction Act.
Yeah, yeah, but I do think I didn't really finish the thread on Elon saying that the margins could essentially go at break even and then they'll make it up on FSD. But I think his point was like the market is clearly not giving any option value to Tesla's efforts in autonomy right now.
Yeah.
And Elon apparently still believes that all the current vehicles out there can be upgraded to FSD, and maybe they become robo taxis. Maybe they, you just have the margin potential. So the fact that he brought that up, I thought was, encouraging.
Yeah.
And the one point which I think probably went over a lot of people's heads who don't realize how important this is he said that Tesla's like the leader in real world AI, and that lead is accelerating. Like their rate of improvement is really increasing.
Yeah.
So I'm very excited about that.
The one thing I'd be concerned of, the one fear I have in the US is this, how unfavorable Elon is becoming in the public spotlight and politically with the current political, Democrats, especially in power and stuff, combined with the likes of Dan O'Dowd and his efforts to try to shut
Yeah,
down Tesla full self-driving. Like if it gets so bad where, you know, that those somehow there's coordination to like get NHTSA to just like do something and then create some legislation in Congress to outlaw FSD, nationwide. That could hurt margins significantly. I mean, I don't think that puts Tesla underwater, but it would be a big hit to Tesla's possible margin potential, in my view, for a while. It would reverse, I think, eventually, but it could for a year or two cause a delay or something in FSD margins coming.
yeah,
I don't think it's a likelihood. I think maybe 10 to 30% chance that happens, which is still significant, but it's not likely.
yeah. All right. Next one seems up your alley. I'm kind of curious what you
All
think.
right. From Kevin 734 64253 on Twitter. Could it be some political dark power is driving the stock down so much? Some political power. That's like a conspiracy theory. Kevin, I think I know you, Kevin.
It-
I know you well, and it's possible. I mean, this is a conspiracy theory I haven't really thought of, but it's possible that Saudi Arabia is trying to drive the stock price down so they can buy out Tesla and take it private again or something. I don't know. I mean, there's lots of conspiracy theories, obviously, and this is one that I haven't really heard, but it's possible. It's not likely, but it's certainly in the realm of possibilities that some sovereign fund is somehow trying to drive the price down. But I don't think it's likely. What do you think, Matt?
No, I don't think so either. I mean, the only thing, my basic answer is no, but I do think like how screwed up the whole ESG system is. I think like there could be some fun saying like, oh, look at like Tesla's really like the governance part in particular. I think is very vulnerable to criticism right now. And so if you start emphasizing that over the environmental, and then
Yeah.
you might be able to kind of strong arm or convince a lot of the institutional shareholders that Tesla is not a good
Yeah.
ESG play for that reason, and that ESG still does hold a lot of sway.
What made you
Unfortunately,
say made you say that's right up my alley?
I like your
Political
comments
dark
about.
power.
Well, because we were earlier, we were talking about like the COVID conspiracies from 2 years ago
Oh,
that turned out to be true. So I always like
okay,
your
yeah,
take on
yeah,
conspiracy theories, because I think a lot of
yeah,
times you have some that I think actually are conspiracy theories, and there's others that I think are not at all conspiracy theories, but that other people think are. So
yeah.
I think you've got a very interesting take on some things that are mildly controversial.
Yeah, maybe. I was like, man, do you think I'm crazy or something? I don't know,
No.
but
I
I
meant
am a
that
little
as a
crazy.
compliment, because you're kind of an
Okay,
independent
okay.
thinker about like
No, I know. I'm just joking with
things
you.
like
I'm just
this.
joking. Yeah, people on Twitter Spaces can't see our. We're just joking with each other. Right. Next question. Let's go to the next question here. From Adam's Invisible Hand on the YouTube comments. I like the name. Question: will auto bidder tied to solar ever happen, or is it just a card company? What do you think, Matt? That's up your alley.
Yeah, conspiracy. Yeah. You're the conspiracy guy. I'm the energy
Yeah.
guy.
Yeah.
No, not at all. So I like auto bidder tied to solar is already happening. I think that it does get maybe overplayed a little bit. Auto bidder is primarily like a wholesale markets product, so like and it can be used on batteries. But the problem is like solar isn't dispatchable. So like if you're trying to bid into real time markets, your supply is what it is from solar, and so you can't really do much with like any information that you have from solar, because you'll just sell it at whatever price you can, because you can't store it unless you have a battery, at which point you're really controlling the battery, not the solar. So auto bidder I think is not as like lucrative as a lot of people think it might be. I mean, I think the real margin potential on Tesla's energy side comes from hardware gross margins, like we were talking about earlier in the show. I think
Mhm.
the software piece of it is going to be important over time, but it won't be material, I think, for like 10 or 15 years. It's kind of
Yeah.
my take.
Yeah. All right. Good answer. I see DS Greg in the YouTube comments is saying Elizabeth Warren, Dan O'Dowd, and Gordon Johnson meeting in a dark room. That they're the dark powers trying to coordinate attacks, dark forces to bring the Tesla stock down, maybe, or something. It's an interesting comment.
I
Yeah.
heard
Yeah.
I heard somebody else in the comments say Gordon Johnson was right, and it's like,
Yeah.
oh, you can be
Yeah.
right for the wrong reasons. And so I think it's really important to know, like I went back to my original Tesla like bull thesis when I went super aggressive, and it was flawed in that I thought FSD was going to be a much bigger contributor to Tesla's margins than their actual hardware manufacturing. So
Yeah.
it's also
Yeah.
I think it's really important to like understand, not just
And
like, oh, I called the price closest, so I'm the smartest. Like,
yeah.
okay, let's break it down. What were you right about with your thesis, and not just
Yeah.
your like your directional call that happens to be right in the short term.
Yeah. Throwing Bill Gates, someone else was saying, into the dark room there too. There's a lot of people that really do not want to see Tesla succeed. And if they were coordinating their efforts, who knows what could happen, I guess. I'm glad Elon got rid of his margin balance. Imagine if he never sold shares and had like a margin balance all this time after paying,
Ooh,
Oh man, that would be tough for him.
That
Oh
that
my
would be
gosh,
worse. Yeah. I mean,
that
now
would be
granted,
worse.
he caused part of the slide down, so
Yeah,
maybe he'd get margin called, and then we'd be at the same
it'd be
place.
where.
But
Yeah,
I don't know. I'm glad.
it
I
would look
think my
bad
favorite
really if he was margin
comment in the
called.
last week was Elon saying that he's not going to sell until 2025. I mean,
Yeah,
that was
that
I
was
think
a
a
very
really
good
reassuring
comment. Yeah,
comment.
is he not still selling, like, right after the window opens in January, for example, or February after the earnings call? Like, that's a concern I think a lot of people have been having. Is he gonna sell more next quarter, another $10 billion worth of Tesla or whatever? But he pretty much confirmed that he's not anytime in the next 18 to 24 months.
Yeah.
And he's not definitely gonna do it after either, but, I mean, the worst case, he's got enough capital for that even if we go into a really dark recession, basically.
All right.
Next question is from Breakfast Pizza in the YouTube comments. Thoughts on the 4680 update tweet sent recently? I was really excited. I mean, that's 1,000. That's enough batteries for 1,000 cars a week. I mean, that's really impressive. That's like, what is that? 5% of Tesla's output this year, or no, more or less, like maybe 4 or 3.5%. But that's a lot more than it used to be, like 0.1%. It was just kind of a pet project, but it's creeping up to be like substantial every few months. It's like they're really ramping up. I mean, the last update was much smaller, I feel like, and it was underwhelming. But enough batteries for 1,000 cars a week. That's 50,000 cars a year worth of these if they didn't ramp up further. But of course they're going to keep ramping up, right? So, what did you think about the tweet, Matt?
Yeah, I mean, it was clearly surprising. I mean, it's one of those things that like they've missed the timeline on 4680 so much, so it's almost like people's expectations just drop completely. It's like, oh, all right, kind of
Mhm.
like FSD. Like, I guess it's just another failed Elon promise. So, like, how are we going to ramp up, lithium ion or other kind of chemistries because they kind of failed at 4680, and then it's just a helpful kind of reminder that no, they're still working. It's just delayed, like kind of Elon's MO or whatever is that he's you can criticize him for being late, but not for being wrong. And so I
Yeah.
feel like that's what's going on here. Like it's still like a very small percent of the overall like volumes that they need to get to, but it was a really important milestone, I thought. So I was personally surprised that they got to that level. So if they can scale up and continue to get these into production, I think it's going to be really, really good news eventually.
Yeah. Yeah. Next question is from Boiled Down AH, one of our favorites in the YouTube comments, saying, question, if you watched Farzad's video from the other day, people were commenting that the IRA, which is the Inflation Reduction Act, won't take effect for 3 or 4 months. Are we sure that the $7,500 IRA rebate will be in effect January 1st? Are you
Yeah,
sure,
so
Matt?
I don't think so. No, I mean we definitely won't have the clarity then. So if I'm a buyer and I don't have the clarity on that, then I'm probably not. Maybe it might be effective retroactively, but like I'm not going to go out and buy a car if I'm not sure about it. At least
Hmm.
it will certainly impact my decision. So I do think it's a fair comment that you may not see this big uptick that I think a lot of us were expecting, even if the cars ultimately end up qualifying. But I
Hmm.
don't know. What do you think? Do you have any thoughts on that?
I leave that to you and people like Mad Manx and Duncan Galloway to inform me on, I guess. It'll be there. I just don't know January 1st whether it kicks in or not. I think what it isn't it supposed to be that you get the rebate when you do your taxes for 2023 if you buy it January 1st, 2023 or something. I don't know. That's
Yeah.
what I thought. So it's not like you
Yeah.
get
No.
the rebate right on the spot at the dealer or from Tesla when you buy
No.
it, but maybe later in the year that'll start happening or something.
Yeah. I mean, it shows up, I think, as a credit on your tax return. So yeah, it's
Mhm.
not like you still have to pay all the cash and like get it financed and pay for the full amount. So if you're just looking at your monthly payment, then you're like, all right, well, interest rates have gone up, and this car is still expensive, but you will get that $7,500 tax credit, assuming the guidance is issued in March or whatever. But yeah, it's not like a direct cash payment to the consumer.
Yeah. Yeah.
Um, so do you want to go all in question, or do you want to go Starlink question? Maybe we can do one or
All
two
in.
more.
Yeah,
All
we'll do
in?
maybe
All
one or
right.
2 more questions. All right, Matt's we're missing Alec behind the scenes today. Matt's
Oops.
controlling the questions here. So
Hang on, I got the wrong one
from
here.
okay,
That's oh shoot, I lost it. Where
that's all right. I
there we
can just
go.
read a question. Okay, we got
Oh,
a
that's all right,
bunch
I
of
got it.
questions here
Sorry here.
too. I think.
All right, here it is.
From Jeff on the YouTube comments, did you guys see David Freeberg on the All In Pod gave Elon on the same episode that he appeared the Rudy Giuliani Failure and Achievement Award or whatever it was? I did not I did not watch the end of it. I did not
Oh, you
watch
didn't see
the end of
that?
it. I saw the Elon segment and Michael Schellenberger segment and some of the beginning, but I didn't watch the entire 2-hour episode
Yeah.
or listen to it.
It
What
it,
happened?
it so it was the self-immolation award, I think, or something like that. So like
Okay.
who basically like shot themselves in the foot unnecessarily this year.
Uh-huh.
And so like in the context of them kind of gushing over all the new Twitter features that were rolled out and
Yeah.
like what a genius Elon
Yeah.
was and him just being on the on the podcast, dropping in unexpectedly. Yeah, Friedberg said, you know what, I think Elon actually has done a lot of brand damage to himself this year. And you
Hmm.
like all the other besties were like, oh, I can't believe you even said that. That's one opinion. Sure. Like you could look at it that way. But like
Yeah.
I kind of give Friedberg some credit here. Like Elon has not helped himself. Like he could have
Mhm.
handled things, I think, a lot better. Like
Mhm.
I still think he's executing well. And
Sounds like Freeberg is an investor in Tesla, and that's why he said it probably.
well, it was kind of funny because he was like tiptoeing around it. Like he was very cautious about the way that he was leveling criticism.
Yeah.
But like, I think it's a fair point. I mean, we've been critical of Elon too for the way that he's handled a lot of this stuff this year.
Mhm.
And I think just if he had been a little bit more tactful or kind of self-aware of the way that he was coming off, I think the kind of brand damage and frankly the stock price damage could have been a lot less. So
Yeah.
but nobody else kind of jumped on that bandwagon. I think they
Yeah.
want to preserve the goodwill that they have with Elon.
Yeah. 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 Freeberg is the one guy I sort of usually don't agree with. I feel like there's a lot of flaws in he's just like hyperbole a lot on things. So I don't know. Maybe because he's a vegan and I'm not or something. I don't know. I don't know. He's like save the animals, it's fine. I respect people like that, but um it's just he has very different viewpoints on a lot of things versus me. You know, it's interesting. But
Yeah,
I
I,
like to hear his
I
viewpoint because it's different, but I just don't agree with it a lot of times.
I agree. Like I generally feel the same way, but even I was kind of I'm a huge Elon fanboy, but even I was kind of cringing of like, oh, like there's this amazing new feature on Twitter where like the stats are visible, and it's like that's
It's
cool, but like I don't think
yeah,
it's worth like talking about on this forum on the super popular. It just
yeah,
seemed a little bit more like kind of
that's
sucking up
true.
to Elon than like
Yeah,
actually giving their honest thoughts
yeah.
or whatever. But
Well, let's do another question. Then I want to ask you something about the stock before we go. All right, another question. And then I wanted to ask you something about the puts pricing.
all right.
So from Melody of 1974, faithful fan, I see you're commenting every week on stuff. Question: have your kids played Roblox all day since Christmas? They've wanted to play Roblox all day. We limit them to 2 hours a day on like weekends or days off. So yeah, that's like their one of their favorite activities. It's very social for them. It's I think it's better than just like watching TV or like, sometimes they might want to watch like YouTube on TV, like kids YouTube or whatever, or watch cartoons. And for me, I feel like Roblox is better than just watching cartoons because they're interacting. They're not only like control, it's not like just like playing a one player video game, which is also better, I think, because you're actually thinking and have to interact with something, but they're interacting with other people like themselves and other kids that they're friends with. So it's like a very socially immersive. So I'm not, I've seen people say a lot of negative comments about Roblox on this like poll I put up the other day, but I think it's actually in moderation. I think, I'm open to the idea that it's actually healthy for my kid's mind if it's done in moderation. So, um, yeah, I see them playing it. They get super excited. They play it. They got their Roblox gift cards from different relatives. It was like, again, the number one gift for me and lots of families I know around here that are get kids play Roblox. And I play Roblox, and we have they have aunts and uncles that are learning to play Roblox with them to interact. It's interesting because some of the games are pretty involved. I play it occasionally, just interact with my kids, and test it out. But it's kind of a cool way to like interact with your kids when they're into it. They get so excited when you join like whatever virtual world you're in with them. It's funny to see the kids get so excited and try to show you how things work and stuff. Um, anyway, so Matt, I wanted to ask you a question, or do you have any thoughts on that before I ask you a question about the stock price?
No, we bought the kids a dictionary from 1828. So my kids are not on the
You're not on
the
the
Roblox
screens.
bandwagon.
Not on the screens yet, or
No,
the
we
Roblox.
were kind of very intentional, maybe too much, but about really not
That's
getting them
okay.
in front of the screens.
Yeah, yeah. No, I think that's okay. I grew up on screens a lot, and lots of my friends and people I know did, and I know some people that grew up without being allowed to use screens or video games. And just for my anecdotal evidence, I don't think it changed anyone's upbringing. But maybe if you take a large enough data sample, maybe there is a difference. I don't know. People speculate all kinds of ways on that. I'm sure anything in extremes is bad. Like if you're in your room playing a computer game 20 hours a day, that's terrible. You can't do anything like that. But in moderation,
Yeah.
I think it's fine. Anyway, question about the stock price. What is your model for the price of what are the earnings for Tesla in 2025 that you have on your mind? Do you recall in 2025 what are your earnings for Tesla?
So I mean, I haven't gone through and scrubbed that recently.
If
Like
you had to
I think
guess, what would it be? Not scrubbing, just like what's your
if
guess
I
on
had
it?
to guess, probably my unadjusted numbers from, let's call it like 6 months ago, were probably like $19, $21, somewhere in that range. I'd think.
In 2025, I thought like next year was like $8, and then 2024 would be like 15 or something, or so $20, something
Yeah,
like that. You're thinking,
yeah.
okay, and
I think kind of slowing down the
that's
growth.
assuming FSD doesn't take off. Really, that's
Yeah, I
sort
mean,
of right
I think I assumed like a modest uptick in take rate, kept the price
from
the same
10% to
because
15% or something,
yeah,
or probably something like that.
I can give you the number. So this is not a current estimate that I've looked at recently, but looking at my model, what I have in here. Oh, geez, no, actually this was adjusted. So I did bring down some stuff recently that's carrying forward in this model. So this model, I'm not going to share this figure because it's just not accurate. But yeah, I would have guessed my previous version was somewhere in that like $19-$20 range, something like that.
$20. Okay,
Yeah, I'm
okay.
curious. Where's this going?
Well, with that kind of conservative assumption that you have without the FSD take rate going up any substantially, then the $100, the five to it would be at like a 5 PE if it was trading at $100 a share. Then approximately a 5 PE while it's still growing. I wonder what the PEG ratio would be. Absurd, but a 5 PE, and that means $100 a share. Well, the puts for that are $28 right now. You can sell those puts for $28. That's like 13, compounding over 2 years. It's like 13 or 14% rate of return over 2 years. If you were to sell those puts, for example. I mean, none of this is investment advice. None of thing. Remember, we had that strategy in our fund a while back where we sold a bunch of
Yeah.
those puts, and that worked out well for us. But it just seems like, man, if I had a lot, if I had, maybe I should convert my stock to just selling. I don't want to pay the tax consequences, but if I didn't have tax consequences selling my stock right now, that could be like a really easy way to, because I wouldn't mind buying. Like if I was assigned Tesla, that would be like I'm assigned Tesla buying it at $72 a share, like that wouldn't be bad I would be happy with that, but I doubt it would even get that lower, over 2 years from now, so that's crazy. And the probability of that, according to the probability lab, of $100, what did we say? Oh, that's like 55%. Wow. Yeah. The probability lab in January 2025, 50/50 is at $90. So it's like, 55% or close, around 55% that it's going to be $100 in January 2025. That somehow that's what the options market is pricing in. So anyway, it's crazy times. I just want to leave on that thought just for people to think about, I guess. I don't know.
Yeah, I mean,
Crazy
it's
times.
interesting. Every time I start looking at puts, though, I'm like, I don't know. I just that's a nice compound rate. I agree, but then there's the upside of the stock. I mean, if imagine they actually do solve autonomy, and then the take rate goes up, things drastically pick up from here. I mean, the upside potential, I really still do believe in. I mean, it's definitely taking a long time, and I don't want to price it in for a base case, but
Yeah.
I think there's so much opportunity if they if the rate of improvement of their AI, like he was talking about, really does improve. And but let's assume, I mean, I think by 2025 too, the other thing I didn't put in there is anything at all related to energy margins, which may be a horrible assumption. I mean, maybe you do have very meaningful margins at 50 or 60 gigawatt hours by that point. I mean, that could be really, really meaningful
Yeah.
contribution to the earnings per share profile. So
Yeah.
yeah, I might want to scrub that and look at it a little bit more closely because there's I agree with you. There's a lot of interesting things, and the multiples are just kind of wild
Yeah.
if they actually do grow earnings in a pretty meaningful way over the next couple of years.
Yeah, yeah. Well, Matt, this has been a great episode. This I just noticed. I was looking at. We have almost 1,000 people on Twitter Spaces. That's Twitter Spaces really ramping up. First time we've had more on Twitter Spaces than YouTube live watching. We didn't telegraph it on YouTube like we normally do. We have about 800 on YouTube live, but yeah, we do this both on YouTube live and Twitter Spaces, so we can't bring people up on Twitter Spaces to talk, or people on YouTube wouldn't hear them. But maybe in the future, if Twitter Spaces continues to grow and YouTube dwindles, we'll just do this on Twitter Spaces one day. If the Twitter Spaces crowd is 5 times that of YouTube, for example. So
Yeah,
certainly trending in
that'd be
that
awesome.
direction. Yeah.
And I will say, if Elon ever just shows up on one of these, we're dropping YouTube, and we're
Yeah.
just
Yeah.
gonna
Elon, if
bring
you're
him up.
listening on your burner account, feel free to jump in any week, any Tuesday. We'll be happy to pull you up on stage, and we won't care about the YouTube audience then. All right. All right.
All
Well, it was
right.
good chatting with everyone. We'll be back next week. Hopefully, it's not another low next Tuesday. Every Tuesday, it's been another low, but just to let you guys know, that's the trend. So hopefully, it's not. Maybe the new year will bring something different, a different trend. Hopefully. All right. See you guys
All
next
right.
Tuesday.
Thanks, everyone.
All right.